Now, once we've gathered all this information, what's going to happen here is Susan actually pays her first premium. So much like with individual insurance, we collect that first premium. Group insurance, is almost always paid for monthly. You'll almost never find a group that pays its premiums any other way than monthly with group insurance. So she pays her first premium, and what happens now is all the employees that were working here at this time, all the employees for whom we've collected data, they're all covered. They're on the plan. But let's say, and what that means for them, of course, is if they have claims, that those claims will be honored from this point. There are very few exclusions with group insurance plans. We talked about this earlier. There are some limited exclusions to the accidental death and dismemberment portion of the plan. The health portion of the plan is typically going to have exclusions for things like elective coverage and cosmetic surgery. But for the most part, these folks are going to be covered no matter what happens. There are some exclusions for the long-term disability portion of the plan. Typically, if you've received treatment in the 90 days prior to the start of coverage, and then you have a long-term disability related to that condition in the year after coverage starts, we're not going to allow a long-term disability claim. But after you're out of that year, then you're in the clear, and if you happen to submit a claim for benefits for something that was a pre-existing condition, but you've been covered for more than a year, most plans will pay that claim. However, going back to this first premium now, so Susan has paid her first premium, the plan is in force, so now we have insurance, and we can have claims honored. There may be some restrictions. Susan might find, for example, that she can't submit a claim for her child's braces for another year or maybe another 2 years. But whichever, we now have that first premium, and over the course of that year, she just pays her premiums every month, and we get to the end of the year, and at the end of the year, Susan will have to deal with her renewal. Now, we talked about this in another video, but briefly what's going to happen here is we look at the claims experience for that previous year. In a small group like this one, we attach a relatively low credibility to the claims experience for that year, but if we have a whole bunch of drug claims, for example, then Susan can count on seeing her premiums increase because the insurer says, whoa, hang on a second, that's more drug claims than we were anticipating having to deal with. So she renews and coverage continues. Now let's say that a year and a half after we've put the plan in force, one of these folks, one of our employees leaves, one of the retail folks leaves, and we have a new person come on board. So let's look at the stream for this new employee. Well, with our new employee, they have their start date, so they start work. In a situation like this, it would be quite common to find a 90-day elimination period, or a 90-day waiting period, or a 90-day probationary period, during which time that employee will neither pay premiums nor be covered under the plan. During that 90-day probationary period, the employee, sometime in the 30 days prior to the start of when they would be covered, or sometime in the last 30 days of the probationary period, we're going to have the qualification period. And then in that qualification period, that really just means that's the time when we're going to do the paperwork and opt to join the plan. If the employee does not opt to join the plan in this point in time, then the employee would not be able to join the plan later on without doing some medical underwriting. However, most folks, if they want to join the plan, are going to fill out their paperwork here, which is going to include giving some medical information to the insurance company, and more importantly, typically doing things like filling out beneficiary forms. Now, Once you've done this, premiums will start at the point at which you become eligible for coverage, and you're now eligible for coverage, so you can submit claims. But in order for those things to happen, there's one little thing that has to happen, and it's not a big deal in most cases. It's actually pretty run-of-the-mill. It's what most of us do every day, and that is this employee has to show up at work. That is, they qualify to join the plan under the actively at work provision. And actively at work just means that person came to work that day. If they didn't come to work that day, their benefits won't start that day. They'll start when that person comes to work. Which I think seems like an element of common sense, but it's one of those things, if we didn't say it, then people would abuse it. So I know it's just a quick run through, but I did want to talk about some of the functioning of group insurance. We talked about the handling of claims earlier when we talked about funding, and you'll deal with the handling of claims a little bit more in other modules as well. So hopefully, like I say, this gives you a quick overview of how group insurance works, and we'll see that there's all kinds of opportunity to manipulate group insurance plans. There's a number of different ways they can be structured. There's not basically one off-the-shelf group insurance plan. It really does depend on the employer's circumstances. Good luck and enjoy your ongoing studies. Thank you very much.